Morning YouTube, Chris Worden, First Business Rescue, first day back in the office after the Easter bank holiday weekend. So today's video is about saying goodbye to the bounce back loan. The end of last month, people could no longer apply for the government-backed bounce back loan. So there are many business owners out there that've got lots of questions about bounce back loans. And over the next week or so, I'm going to try and answer as many of those questions as humanly possible. So the first question that I'm going to ask is, can I strike off or dissolve my company if it's taken a bounce back loan? Now, thousands of business owners in the UK are waking up to the fact that their businesses will not survive, and the bounce back loan was not enough to help their business bounce back. Now, I've said before, the cost of liquidation for a small company in the UK is on average £5,000 plus VAT. So lots of directors are thinking, can I simply strike off the company from the register? And listen, with money being tight, it's a very fair question. Now, if you'd have seen my videos previously, you'll realize that striking off a company is meant for a company with no debt. And if you do plan to strike the company off with debts, you must write to the creditors to inform them. And here lies the problem. If you attempt to strike your company off from the register, so in normal times, you fill out in a DSO1 form, you send it into company's house, and let's say if you owed HMRC some money, you'd also send them a copy of the letter, a copy of the DSO1 with a covering letter saying, listen, I've got no money, no assets, I'm attempting to strike the company off. Now, the banks are going to be informed that you are attempting to strike the company off, and they'll object to the strike off. Although these are government-backed loans, the banks have still got to follow the correct protocol. So it's their job. Simply, they're not going to allow you to strike the company off. If your company does get struck off by some strike of luck, the company is likely to be reinstated, and it can be reinstated at any point in the future. I don't like being too technical on these videos because they're designed to make insolvency easy to understand. But in the Companies Act, there is a law, and it states this word for word. Even if a company is struck off, the liability, if any, of every director, managing officer, and member of the company continues and may be enforced as if the company had not been dissolved. Now, in short, if you're not going to be, in short, you are not going to be able to strike your company off if you've taken a bounce back loan. And if your advisors are telling you any different, it is time to get some new advisors. Now, my job at First Business Rescue is to inform you, is to make insolvency easy to understand. So answer the questions that you've got in a way that people can understand them. It's free, it's independent, it's impartial advice. So in the next video, I'm going to be talking about how about liquidating a company with a bounce back loan. But if you've got any questions, drop them in the comments section below. I should have said at the start of the video, if you like what we do here at First Business Rescue, subscribe to the channel. Go and follow us on Facebook. I hope this video has been helpful. If there's anything that I can do to answer your questions, because I know this is causing a lot of concern for people, please let me know. Have a wonderful day. Thank you for your time. All the best, Chris. Bye-bye.